Harshad Mehta was a stock market player as well as a money market broker. He was the favored broker of State Bank of India and its subsidiaries, National Housing Bank, UCO Bank and ANZ Grindlays. While the banks were supposed to be trading securities with other banks, the funds were mostly credited to Harshad Mehta's individual account. Harshad used the funds for his stock market operations, and peddling the replacement cost theory sent stock prices soaring to dizzying highs. Replacement cost is the cash that a firm needs to replace an old asset at the current market price. In Harshad's view, a manufacturing company's stock market value should be equal to the investment required to set up a similar capacity. For example, if it took 500 crore rupees to build a new cement or steel plant of a certain capacity, then an existing company with that capacity should be valued at 500 crore rupees. A group of brokers, mainly rivals of Harshad, had short-sold many shares, convinced that the exuberance in the stock market was not supported by fundamentals and that the rally would not sustain. Thanks to the banking funds at his disposal, Harshad was able to carry forward his buy positions and push prices even higher. The continuous rise in prices bled Harshad's rivals financially. To square up their short positions, they had buy shares in the open market, which further fueled the rally and cost them more money. In January 1992, RBI began inspecting the books of banks for irregularities in securities transactions. In April, the RBI found a shortfall of 649 crore rupees in SBI's investment portfolio. The bank did not have the securities it had paid its broker Harshad Mehta for. Under pressure from SBI, Harshad paid up around 620 crore rupees between 13th April and 24th April. But the RBI dug deeper and found that Harshad had paid 574 crore rupees from his Grindlays bank account. Of this, 489.75 crores rupees was funded by National Housing Bank checks drawn in favor of Grindlays Bank and credited to Harshad's account. That appeared to be a securities transaction between NHB and Grindlays, but NHB did not have any securities to show for it. The cat was finally out of the bag. Unfortunately for Harshad, the BSE stopped trading operations on 16th April as brokers went on strike protesting against the directive from SEBI asking them to re-register and pay a higher registration fee. That prevented Harshad from being able to sell a part of his holdings and repay SBI. Under pressure from the broking community, SEBI diluted the hike on 20th April. Old-timers say the bear cartel, aware of Harshad's problems, prolonged the strike by making other demands. Harshad is said to have approached a foreign bank with close ties to the bear cartel, offering a part of his holdings at a discount. But that deal did not work out. Trading finally resumed on 27th April, but by then it was too late for Harshad. The discovery of the shortfall in SBI and the subsequent disclosure of the payments by NHB created a crisis in the securities market. Other brokers too were unable to hide the holes in the investment portfolios of some banks by replacement deals. One after the other, fictitious deals at various banks started getting exposed. Bank of Karad and Metropolitan Cooperative Bank, which had issued BRs and SGL forms without any underlying securities, suffered massive losses and went under. By mid-May, the CBI froze Harshad Mehta's bank accounts and seized his assets. 3 weeks later, Harshad was arrested by the CBI. With news of the scam becoming public, and the fund flow into the stock market drying up, share prices nosedived. From a high of 4,467 in the last week of April, the BSE Sensex crashed to sub 2,600 by August.